What requirements must be taken into account to file tax reports for LLC with foreign owners?
Okay, for the for an LLC with foreign owners, there is an additional obligation related or compared to the ones with U.S. resident owners. An LLC with a regular LLC with two or more owners will need to file a tax return at the end of the year with the IRS. The tax return will include the income and expenses of the company, the calculation of the profits, and based on that, will create one sheet that will be given to every owner of the company according to the percentage that they own in the company, and that percentage will distribute the profits of the company. So if there is $100,000 and there are two owners, 50 and 50, each one will receive a document that is called a K1 with $50,000 to report in their individual tax returns. That's a process. Well, then later the individual owner will go and file its personal tax return, and with that document will include the K1 will be included in the tax return to pay taxes with any other income they have, for example, salaries, pensions, distributions, whatever they might have, interest. But once that is completed, there is one more step, one additional level of reporting for LLCs or limited liability companies with foreign owners. The limited liability company with foreign owners is required to withhold every quarter 35% of the profits that corresponds to that particular foreign owner. So if the company has two owners, and through the year, in the first quarter, the company makes $20,000. The two owners, one is U.S., one is not. Then the first quarter $20,000 profit, it is divided into two, so 10,000 and 10,000 for each of the owners. There is one owner who is a foreign citizen. Out of those $10,000, the partnership will need to withhold $3,500 to give it to the IRS. And this happens every single quarter. At the end of the year, the foreign owner will file a tax return, will apply for an ITIN, an individual tax identification number, will file a tax return, and if that is the only income he or she has, he will have to require a refund. If the owner of the company, the foreign owner of the company, shows more income, probably he will receive no refund in that case. But this is how it works. And this is many, and this is the problem. Many times foreign owners are advised, just open an LLC, but there are consequences. There are tax consequences that they are not informed. They are not aware because they are not in the US. And usually people who open companies, they are not CPAs, they are not tax specialists. They don't know the tax consequences of opening an LLC for a foreign owner. So it's very important that every foreign owner knows about this and he is aware, and the company also is aware that there is this withholding for the profits of each one of the foreign owners, and the partnership is in the obligation to report to send this money to the IRS. Otherwise, it can be penalized from the IRS.